Hello, everyone, and welcome to Why Are My Insurance Premiums Going Up? Understanding Fraud with and Without IT Convergence. I'm Jennifer Getz, the Editorial Director of Continuity Insights, and today's webinar will be facilitated by Harvey Nuz, the Chair of the Cybersecurity Special Interest Group with the Association of Continuity Professionals, ACP. And this is the first Cyber Special Interest Group webinar presented by the ACP and Continuity Insights, and we so appreciate you joining us for today. Before we get started, I'm just going to cover a few housekeeping items. You are welcome to ask questions during the presentation today, but there will also be a question and answer segment towards the end. If you look at the bottom of your screen, you'll find a question box, and this is where you can submit questions for our speaker today. If at any time you experience any kind of technical difficulty, please send us a message via that question section, and someone on our team will answer you privately. Now, without further ado, Harvey will introduce our speaker for today.
Hey, good morning, everybody. Welcome. Thank you, Jen. Thank you, Neil. Thanks for hosting us. We're looking forward to doing this now. My name is Harvey Nuz. I'm a longtime IT, cybersecurity, disaster recovery professional in all the related areas. And James Mitchell asked me to start this SIG a year ago, and we've been doing it this year. We're very glad to be over here. Today, we've got a great topic on fraud. Um, Not how to do it, but how to prevent it and how to look for it and all of that. And I've known Gabriella Marshall for a long time, and she's a fixture in the community here in the ACFE community, and just is a great speaker on this topic. Just very glad to have us. Um, Again, just please put your questions in the chat. And I also want to thank Jen for being a co-moderator today, as I've lost my normal co-moderators. So, Gabriella, all over to you, my friend.
Hello, everybody. I'm Gabriella Marshall. I'm in Houston, Texas, where we have a balmy, wintry weather today. So I'm appreciative of that. I'm the president of the Houston ACFE chapter, and ACFE stands for the Association of Certified Fraud Examiners, which is a group of people in the Houston area who are members. We're actually part of the national chapter, which is a nationwide and international organization, ACFE, and we work with a number of other groups as well. So that's how I met Harvey, and I know what you all do is cybersecurity and IT are intrinsically related to fraud in every way. So he and I were talking about some of the convergences there, and he said, this would be a good group you may want to talk to. Whether you are in cybersecurity or not, all of us are insurance consumers, and all of us all over the country have observed a dramatic increase in our insurance premiums over the last year or two, especially, but in the last few years. And so this topic that I'm going to talk about is appropriate not only as a fraud professional or a cybersecurity professional, but also as a consumer. So that's the focus of where I'm going today. So the question is, why are my insurance premiums going up? So what we're going to talk about today is here's kind of the overview, and I like to kind of keep to the topics as best I can. We're going to talk about why people have insurance in the first place. And then we're going to talk about some of the key drivers of how the premiums, why they're going up and what that looks like in reality. And then we're going to drill down a little bit into fraud, which, being a fraud investigator myself, is my favorite thing to talk about. And some of the specifics of how fraud manifests itself in the markets, and how I'm working in that world. That's not to say that there aren't 1,000 other ways to commit fraud. I'm just going to focus on the ones that I am able to, given our time constraints, and also because that is my passion. And then at the end, because you all are cybersecurity and IT professionals, I put some thought into how AI and the internet and software and all that are working in this space. And so there's some specific comments to that effect. There's several things going on as to why insurance premiums are going up. So we have a lot of economic pressures going on, and that's, across the board around the country and the world. Climate is definitely a part of it. Social inflation and systemic fraud. Fraud and litigation are intense drivers of what's going on in the insurance world. And I think that's where people aren't always aware of the complexity and of the how much that's occurring, but those are definitely issues as to what's affecting insurance. And let me just also clarify, when I'm talking about insurance, I'm specifically talking about the kind that you purchase, like auto insurance, homeowners insurance, property insurance, slip and fall insurance for commercial properties. I am not referring to healthcare related insurance, except as it pertains to the auto and commercial market. So I'm not referring to the kind of insurance that most people get through employers or ACA plans or Medicaid or Medicare. Those are outside the purview of this discussion. I'm specifically referring to the kind that you would purchase from, I don't know, USAA or Nationwide or State Farm or that kind of insurance. There's a lot of industry trends going on. Technology definitely is changing the way insurance is sold, purchased, and fraudulently used. And then there's, we're going to talk a little bit about how to mitigate some of these factors as best we can. So I think it is definitely important to mention or just to define why people have insurance, because I think that has muted and changed over the last several years. Our original purpose of insurance and the way most insurance companies approach selling insurance is that the purpose of it is to provide a policyholder with the assurance that if something happens, the insurance company will make it whole. We call this indemnity. Now, why do I bring up this very basic point? You'd say, Gabriella, everybody knows this. Well, I think if you think about it, our society, and especially because of social media, billboards, TV shows, whatever you want to call it, why this is, it has, in some, and not for everybody, but in some cases, having insurance has become an opportunity to perhaps get yourself a new roof or get yourself a replacement kitchen when something floods, or if you're in a car accident, dollar signs are kind of in people's minds, and that has a lot to do with how the industry that makes insurance claims is advertising itself. And we're going to talk a lot more about that later in the presentation, but I just wanted to put that in your thoughts. So the first thing that everybody talks about, and I cannot underscore more, is that climate change has definitely affected the way our insurance markets, are working. The complexity of weather events, directly affects how insurance is sold, and the premiums, and how, where it's sold, when it's sold, under what conditions it's sold. So climate cannot be underestimated. And everyone that is on this presentation can point to a weather event, probably more than one, which has affected them quite personally, either is in the market, or even in your own home or your business. I'm going to point out just one, because we could talk about this topic all day long. Insurance premiums in Texas, where I lived, rose dramatically in the last few years due to a winter storm we had in 2021, Here in Texas, it rarely freezes more than a couple of days at a time. But we had a storm that was so bad that, actually, I think over 700 people died. 20 billion was, in losses. I heard a statistic that State Farm had more claims in that one, there was like a 2 or 3 day period when this occurred, than they'd had in the entire year for just that one day. So that gives you an idea of the volume of what happened, and that's unusual for us. But I think every one of us could point to a weather event which is quite unusual, or much more dramatic than we remember in the past. So climate is definitely affecting our insurance markets. So we're increasing natural disasters, and as an insurance, the response to that, and I don't want to stay too long on this topic because I've got a lot more to say about fraud, but it's affecting how people sell insurance, where they sell insurance. California, for example, is dramatically affected by the wildfires. A lot of the carriers have actually left the state or have modified their policies in such a way that they are only covering certain things, or the premium costs have skyrocketed because of the wildfires and so forth. So when it says market exits, what that means in real life is that carriers leave the area or the state, or they'll say, I'm not writing in this particular area. For those of us that live in a coastal area, we're seeing that quite a bit with insurance companies regulating where and when, like within 100 miles of the coastline is kind of a standard way of looking at where they're going to sell insurance. So climate is absolutely a huge factor in what's going on and why the premiums are going up. Another part of this is the supply costs. I think we can all understand that, like with COVID and the supply chain irregularities that occurred, the effects of that have not gone away. So labor shortages, the disruption in the chain of, products like roofing shingles, for example, like dramatically increased, metal, pipes, all those things. If just think about it from your own perspective, I'm sure if you've been in one of these storms and you try to go to the Home Depot to buy some wood for your fence that blew down like ours did, all of a sudden there is no wood, and the wood that's there was 3 times what it was, a few weeks before the storm. And that's kind of a reality of what's going on. So supply costs have definitely increased due to, and the cost of that. So it has, insurance companies are eating that. You may have noticed, and I've just noticed this personally myself, that cars tend to be totaled out more than they used to after an accident. You're like, well, my car's perfectly drivable. It needs, I don't know, $3,000 worth of repair, but it's a $30,000 car if I bought it new. So I would like it, to be fixed for 3,000. And you may see that your insurance company's totaled that out. You're like, why is that? Because by the time the parts are purchased, by the time the rent car, which now takes much longer to fix the car, so the rental thing is longer, it may cost them more to fix your car than to total the car, especially when you add in the rent car issues and such. So that's what you're seeing is the supply costs have basically driven up the insurance companies, what they're paying in that indemnity space, what I talked about earlier, indemnifying. They're replacing the car. Well, it's cheaper to total it out and tell you, well, you need to get your own car. Here's, the value of your car. Goodbye. Not to say that always happens, but I've just noticed that myself, just anecdotally among my community. In 2025, also, we cannot underestimate the effect of tariffs on the supply chain and those costs. They're absolutely causing auto policies, home insurance policies, et cetera. It's causing a rate increase on the supply. Again, like I mentioned, like plywood, if your house burns down and you need to buy all new appliances and you need to rebuild the house, and the construction market is squeezed right now with labor shortages and parts. And I know personally, my daughter's car is in the shop right now, and it's going to be $2,000 to fix it. And my the guy that fixes the car told me that at least 700 of that is due to additional tariff costs on the parts of the car. So that's something we absolutely is a driver in insurance premiums going up for that reason. Also, issues with credit. If you notice that last bullet on my screen where it talks about credit negative for insurance, the instability in the market caused by some of these tariff risks is definitely affecting the reinsurance market, which is a big factor on premiums. I talked a little bit about supply costs. One thing I do want to point out is that it can be the regional disparities are true. Like I mentioned before, coastal states, states that have weather events, Texas, California, Florida, are already the effect is definitely increased in areas where there's already issues with extreme weather. I think North Carolina will tell you right now that they're definitely having issues between insurance premiums, the ability to purchase an insurance policy. In fact, one of the issues in Florida with some of the issues with the hurricanes the last few years is that many people didn't have home insurance at all, flood or otherwise, because the markets were so expensive there that people opted not to purchase it. And actually, the legislature there has started to address some of those issues in the last legislature. So that's an interesting conversation that we'll have for another time. This other factor is social inflation, which is a term that a lot of people don't know about, but it's something that we in the insurance fraud world pay a lot of attention to because it drives why we do things. So let me go ahead and define it for you. Social inflation is a term in the insurance industry that we use to describe non-economic factors that increase claims. I don't know if you've heard this term before, but it is something that is definitely discussed in the insurance world, and that's what's called nuclear verdicts. I think we can all think of a weird headline where somebody had a bizarre verdict on an insurance claim. The one that comes to mind right now off the top of my head is this if you may have remembered from several years ago about the lady that got burned in the coffee at McDonald's, and there was a multi-million-dollar verdict against the McDonald's because the coffee was too hot and had burned her. If y'all remember that, that's an example of a nuclear verdict. So we're seeing that we're seeing more of those in the insurance world, and that has a lot to do with marketing and advertising, which we're going to talk more about in a minute. Third-party litigation funding. I don't know if any of you have ever heard of that. In fact, I'd be very curious to see in the chat if any of y'all are aware of that. If you want to put a comment in there to tell me if you've heard of litigation funding, what it is in reference to lawsuits for insurance claims. But there's a new market in investment called litigation funding where outside investors will finance lawsuits in exchange for a share of the settlement, encouraging more aggressive litigation. So that's also one of the reasons why we've seen nuclear verdicts and are going to continue to see that. Juries are more likely to sympathize with plaintiffs, and that is also a very regionally driven analysis. There are certain cities or certain areas of the country that a jury, statistically speaking, will more likely find for a plaintiff than for the defendant, especially if the defendant is a large company, whether that's a slip and fall case for like a restaurant chain or a trucking company that is where somebody is suing a truck driver. In general, like somebody suing an insurance company for various reasons because they were unhappy with how a claim's being handled. And then where you see that in my world, where I live, well, when I say live, I mean like what I do, is with auto accidents. So depending on where a lawsuit is filed and what state, and even drilling down to a county level or a city, there's a different analysis on whether that's something that a jury would find for a plaintiff. And that also is a driver on why and where insurance fraud can occur. And I'll talk more about that in a bit. And then the last thing is that, as courts are addressing a number of different theories, a lot of things that are new, there's a broader interpretation on laws and cases. And so when there's emotional distress or punitive damages requested, a lot of times you might see, more higher jury verdicts or higher awards. There's some very specific examples I thought I'd throw in here. A Florida trucking case where the jury awarded $1 billion in damages against two trucking companies with a fatal crash involving an 18-year-old college student. I have college students myself. Well, they've all graduated by now, but 18-year-olds as in traffic accidents, there's always a tremendous amount of emotion involved in those types of cases. A couple of other nuclear verdicts, what we call in 2023, there were 27 court cases that were awarded more than $100 million in compensation. And so in 2023, which is the last time that we have like complete data for, that drove our social inflation up 7%, which is the highest it's been in 20 years. So what we're seeing is a trend of higher verdicts on these types of cases. How does that evolve your premiums? Well, if you think that billion-dollar trucking company verdict was against the trucking company, one thing to understand is the trucking company's policy, whatever it may have been, that would pay first. So if there was I highly doubt they would have had $1 billion policy. But a lot of trucking companies and a lot of commercial entities have several $1 million policies. And so whatever the policy limits were on that particular policy, they would have been paid in full, right? So let's say you have, I don't know, $50 million policy for a trucking company, all $50 million of that would be gone in that one instance. And let's say you had 10 trucking verdicts against that particular company. And for a large trucking company, 10 verdicts may absolutely be not unrealistic. Then you've got 10 times 50 million. So there you have the idea of where what's happening at the insurance level. So that means that all of that money is paid out, which means that for that trucking company to stay in business, which I highly doubt it with $1 billion verdict, everybody's wiped out. The trucking company's wiped out, mostly because they and I'm speaking hypothetically. I'm not speaking about any particular entity here, but what often happens is that companies will go out of business because they can't afford premiums, because the insurance company has to charge much higher premiums now to compensate for that, that trucking company's verdict or that policy limit being paid out completely. So that's the effect of some of this stuff. Anti-corporate sentiment and litigation funding and removal of damage caps, you throw all those things in together, and that's going to affect the premiums for any kind of a commercial entity doing business anywhere. So you're going to have higher insurance payouts. Reinsurance is what that is an insurance company actually purchases insurance themselves in case of these types of situations like nuclear verdicts, or where they have these very atypical but do happen kind of situations. That's what reinsurance is for, and that's what insurance companies buy insurance companies for insurance for themselves. The reinsurance market has just gone through the roof because, as I said, of all these things, not just the verdicts, but also the supply costs, the weather, all these things. So, and then what that next bullet where it talks about auto liability combined ratio, what that means is 100% means that money that's coming in is the same as out, where you have a net zero profit and loss. For insurance companies in 2019, the ratio is 110%, which means that for every $100 that comes in, 110 went out in 2019, which is why you see a lot of the changes in the insurance market that you're seeing. Now we're going to talk about fraud, my favorite. I've been a fraud investigator for almost a long time, 27 years or so. My children are 27, and I remember being a pregnant fraud investigator. So it tells you how long that's been, at least. And I've been in the insurance world for a while. I've also investigated fraud for the state of Texas when it related to a long time ago, Medicaid and insurance, Medicare and food stamp fraud. And I've also worked for a bit with HP in doing global warranty fraud investigations. So in my mind, fraud is fraud, whether it's insurance fraud or sales fraud or Medicare fraud or whatever. Fraud is a misrepresentation for the purpose of gain, and the evidence and the investigations thereof are very similar across markets, depending on there's complexities in each and every area, but the goal of cyber fraud, insurance fraud, Nate, we can call it fraud all day long, whatever we want to say, is that somebody is trying to get money or some sort of economic benefit through a misrepresentation, whether that's, on the cyber world with ransomware, with malware, with social engineering, whatever you want to call it. That's all the purpose of it. And it's very expensive. So again, I'm focused on insurance fraud myself. So just for statistics, I went ahead and put in some information here about the Coalition of Insurance Against Insurance Fraud data, but we're looking at $308 billion annually, and it rises every year. So it's definitely an important factor. And Harvey, I saw you popped up. Did you want to have some discussion here, or was that
Just yet,
intention?
thanks. I had
Okay.
just noticed that you took yourself off of video, so I thought I was gonna join you, but I thought, no, I'm gonna stay off a while. So keep
Oh,
going. This is
okay.
good.
All
This is
right,
good.
right. It's more to keep myself from being distracted by myself. So,
Understand.
yeah.
Love it.
So, insurance fraud in general, as I said, is about a $308 billion law industry, which equates to $1,000 a person or 37.50 a year. And that's like a global population estimate. So if you look at, people in various markets around the world, some people use insurance more than others. Some have more expensive things to insure than others. So that's a per capita number. That's not a realistic number for how, we in let's say in the United States use insurance. I suspect that number is a bit higher. And so that's translated into your premiums for sure. And so the premiums, they're affected are not just your auto, your property, your health, commercial insurance. It's every line of business is affected by fraud, no doubt about it. In this last few years, I'm highlighting, but I've been doing this type of work for over 10 years with another carrier than what I'm doing now. So, in other words, the work is the same. In fact, we kind of joke when we all meet at fraud meetings. We have various industry gatherings. There's a group called the IASIU that I'm part of. And we all kind of joke with each other. We're like, oh, which carrier are you working for? Or which company are you working for? It's the same people doing the fraud investigating. And, people move around to different companies and employers. So you're like, oh, I'm still with this company or I'm with that company this time, but the work is the same. So it's kind of funny how we talk about that. We're all seeing similar issues across the industry. Fraud rings are using AI to create synthetic identities, deep faking evidence, and faking documents. And so claims are harder to detect and they're more convincing, when presented. Litigation funding and nuclear verdicts, I will talk about that till I'm 93 years old. It's a huge, huge factor. But these are definitely part of the process of what's going on driving fraud. Disaster related fraud, roofing fraud, whenever there's any kind of a weather event, people are running around trying to get your business and calling and all that. That's fraud. A lot of that can be fraudulent. And then staged accidents and premium evasion. I mean, we could go on till the cows come home.
Now I have a question, Gabriella. Talk a
Absolutely.
little bit more about synthetic identities on the previous slide, if you
Oh,
would, a
yeah,
little bit.
absolutely. So a synthetic identity is what that is by definition is what it sounds like, where you've got a mix of identity. So the elder population is actually highly targeted in this factor. When you have a real person with a real, let's start with an ID, information, what's on their ID, they have their address, their phone number, etc., information which looks fairly innocuous. So you may have somebody who applies for insurance in that person's, or let me go back up, applies for credit with that person's identity. So here's a real life example. My father mailed a check to someone, and the check was stolen out of the mail, and they had his name, his phone number, and his address on the check. So that of this person, we live, my dad, my family, we all live in Texas. In North Carolina, started applying for credit using his name and his address, and in that, there's a guy with my dad's name who now has kind of a blended identity with my dad, who applied for a tremendous amount of credit, tried to open some bank accounts and things like that in North Carolina. So that is a synthetic identity, and how that's used. And where we see that with insurance fraud and staged accidents is that somebody might take an accident report with a real person who really had an accident, and they will call up an insurance company or an attorney and say, okay, I am Joe Blow and I had an accident on September 5th and I'm injured. And so I need you to, I'm going to file a PIP claim and a MedPay claim. I want $25,000. That's my policy limit. And send me the check. And they do. That's how it's used in synthetic identities. Whereas the guy who had the actual accident has no idea that somebody has filed a claim in his name.
Thank you.
Mhm. And again, I'm happy to answer questions if you want to throw those in the chat and let me know. So what is it? How does that affect policyholders? So when these things happen, honest consumers are frustrated and upset about how long it takes for their claims to be verified. They bear the cost of this fraud. So instead, next time, Joe Blow calls up and says, I was in an accident, somebody's like, well, wait a minute, Joe Blow, we sent this check to 123 Main Street in North Carolina. And you're saying that you live in Houston, Texas? And Joe Blow says, yeah, I do. I've always lived in Houston, Texas. What's wrong with you people? And the insurance company says, well, wait a minute, we need to investigate something on this. We sent a check for $25,000 last month to North Carolina. So hold on, Joe, we're not going to pay you just yet. We have to wait and see. We have to have you wait and see what happened. And by the way, we're going to send an investigator over to your house to talk to you and just take a look at your car. Is that okay? Well, Joe is upset because, there's this additional level of verification that he wasn't expecting. He needs his car paid for now because it's totaled and all that, and it causes frustration. So honest consumers end up fighting, um, you know, these little battles that they wouldn't otherwise have to fight because of people that take advantage of these types of situations. Um, and because of that, fraud is evolving faster than ever. AI and litigation trends are causing there to be an investment by the fraudsters in greater scale of things, but also insurance companies have to spend more money to keep up with what's going on, right? We have to keep up with um, fake calls and so forth. And so they have to spend additional monies on technology to just keep up with the fraudsters' investment in technology. So let's drill down a little bit about what the specifics about fraud and litigation, because again, that's my passion and where I want to go. So fraud and litigation allows for internet involvement for sure. You've got rings of medical providers, attorneys, people what we call runners, who are people that recruit people to be in rings, marketers and financiers who work together to create and provide documentation and evidence to file the claim. So let's say that one person has a fake receipt and they turn in their claim. Well, they figure out that with the use of the internet and AI software, you can produce 3,000 fake receipts in 10 minutes and file 3,000 claims across a variety of carriers using either synthetic identities where people are not aware that they're involved in this, or you might have people that are paid to give in their identities and cooperate in this process. We call those staged accident rings. They are all over the country. They are everywhere. They are every group, every city, every state, every culture is involved in this. They do tend to target lower socioeconomic people's backgrounds. So they might say, okay, for $500, if you give me your ID, and agree to be interviewed by somebody if they call to ask you about this accident you had. I'll give you $500 and you give me your ID, and then that organization take that ID, sell it to an attorney's office. The attorney's office turns around and works with a medical provider, and they'll run up, say, $50,000 in fake medical bills using that ID. So there are people that are involved in this. These what the runners are, the kind of the go between the attorneys and the medical providers, and the what we call claimants, the people that actually file a claim. And so there's all kinds of these types of activity going on. And of course, if you don't get your claim paid, then the next step would be a lawsuit. So let's do a little bit of some specific case studies real briefly. A synthetic identity fraud ring last year, primarily in California and Florida, was reported mostly through insurance companies paying attention to their own data. So they are creating realistic driver's licenses, although the example I have isn't exactly realistic, but I thought it was probably a good image there. Insurers flagged anomalies when a lot of these customers came in from the same IP addresses, the timing of the claims, and the pattern of the claims. And those are things that are picked up with, IT assistance and data and analysis. So insurers having to kind of, as I said, pay attention to their own data is what stopped this particular ring. But for every ring that is caught, there's probably 100 that they go through, unchecked. Deep faked accidents, photos, and not just photos, but also the use of calling in. We have what's called account takeovers a lot for companies that are both insurance companies and financial institutions. You may have a company that sells both annuities and insurance, for example, or retirement accounts and insurance. So where you have people that are claiming to be so-and-so calling in about their account and, okay, I want you to send a check for $100,000 to this address and all that. So where we have software that can detect voice patterns, behavioral analysis, keystrokes, how the mouse is used. All those types of technologies are now in place for a lot of these insurance companies and carriers to prevent accident, claims and takeover claims and such. So photos being faked and all that. So this particular example is some deep fake accident photos that were in a UK situation. So they were saying that they've risen by over 300% in the UK, and certainly in the United States and in other countries, we see the same issues. A third one, and this is something that I work on most of the time, is what we see phantom billing. So they'll use AI to mass produce fake invoices. We see this with mostly where we catch this is through a data analysis again, identical patterns. When you see like a bunch of people from the same accident who all go to the same provider at the same date and they spend the exact same amount of time. So let's say that the records show they were there from, I don't know, 2 o'clock to 3:17 p.m. and you've got four people who all have the same bills and the same provider and the notes all have the same like problems. That's an indicator that that's fraudulent billing.
Hey, Gabriella, got a
Yeah,
question on your previous slide. Is
yeah.
it fair for me to ask why New York and New Jersey?
This particular
Concentrated in New York and New Jersey? Just
this
curious why
particular
phantom billing.
case,
Yeah,
the case that it's citing is a case that was prosecuted in New York and New Jersey, but
got
we
it.
see it
Got it.
everywhere. Yeah.
Got it.
Actually, just interestingly, New York and New Jersey have some of the strongest laws to fight insurance fraud, specifically with providers. In most of the other states that and especially in Texas, we have like zero laws to fight this type of billing. So it's very, very difficult to fight this type of fraud in Texas, and because of the lack of legislation addressing this type of fraud.
Thank you. Excellent.
So I want to kind of go a little bit faster because I know I can see my time is running slow. In 2025, the DOJ had literally a 10-year long investigation that they concluded this year, where they had over 324 defendants, including professionals, medical professionals, attorneys, what I call runners. Um, and a lot of those were in the Houston area, so and Texas. But if you look this up on the DOJ website, there's a pretty massive press release about this. They had a large investigation that took 10 years, and they took um, several people are in jail. Well, actually, the cases are still in the courts right now, but they will be in jail. Lots of assets seized. And the key thing here was unnecessary and unrendered, meaning they didn't happen services. And then providers and marketers working together to build this into a scale that it just, and this is just one fraud takedown. I can tell you right now, I will be doing this work hopefully till the day I die, because there is no end to this kind of problem in Texas and especially in Houston. Houston is an incredibly a lot of targets for this, but not just Houston, Miami, Las Vegas, New Orleans, the entire state of Louisiana, Florida. I mean, it's incredible the amount of what's going on with this type of strategy. We see a lot of kickback schemes going on, and in where the government is involved, there's a lot of laws involved on how to prevent that from happening. So you'll see what's called Stark law violations and kickbacks. So if there's a Medicare, Medicaid, or like a workers' comp relating to the postal carriers, for example, where the government is a payer, there's a lot of laws and ability to prosecute this type of fraud that private carriers and private entities and private companies do not have access to, because the laws are written specifically so that if the government's defrauded, there's remedies, but very difficult if you're not a government entity. Again, Harvey had asked me to specify and talk some more about talk about some of the ways that computers and AI and insurance and cyber are working. There's the scale of AI driven marketing is incredible. The ability for AI driven marketing to recruit clients by law firms is unmatched, and we're seeing that in the fraud space. And here it talks about, if you have a large volume of new clients for attorneys, how this can unintentionally incentivize unethical behavior. That's 99.9% of what I personally work on. Where I work in that space is if you say, well, I have a legitimate client who was in an injury, and she went to the emergency room and they checked her out and she's okay. So we have a bill for an emergency room bill. And somebody says, well, wait a minute. A company car hit her. This car that was delivering cookies hit her. And the policy is, I don't know, $1 million for this company. $25,000 insurance or emergency room bill. Why would we stop there? We need to have this client have bills that are, more than 25,000. So they go back and so we say, Mrs. XYZ, we would like you to go to the doctor more. And she's like, I don't have time for that. I have small children, or I'm busy, or I have to take care of my elderly parents. I don't have time to go 30,000 times to the chiropractor or the injections, or go talk to a surgeon. I don't, and plus I don't need it. I'm okay. I went to the ER. I'm fine. Well, the insurance company receives a bill for $100,000 in medical on this same lady, right? And so what happened? Well, somebody made some fake bills. We don't know if it's the attorney, we don't know if it's the medical provider, et cetera, but there's somebody somewhere made some fake bills. Sometimes it's even the marketing companies that are doing it. So that's where we see that's my job, is to figure out what's going on. Mrs. So and so, what really happened to you? Where did you stop treating? When? Who provided these bills? How do we get $100,000 medical bills, and so forth? That's what I do. So focusing on maximizing settlements, and you see that, I think, on every billboard all over, driving anywhere in San Antonio, Las Vegas, Houston, Miami, whatever, I can get you millions of dollars is on a billboard. That's, kind of the practical reality of seeing this idea of maximizing settlements. So it does lead to questionable medical billing issues. So before litigation funding came into the picture, we were already dealing with fake medical bills, right? And fake patients and all that. Well, litigation funding has driven it to new levels. And how does that work? So litigation funding, as I mentioned, is funding legal costs in return for a portion of the settlements, and increasing the ability for people to get attorneys for their issues. But what's happening is it has inflated medical costs because, as I mentioned, whether it's real medical treatment or fake medical treatment, it incentivizes more medical treatment. Then when you have cases that are in litigation, let's say that your case is in a lawsuit in Harris County here, it is not uncommon for a case to take, and I'm not kidding, 6 years to make it to a trial from the day that you file a lawsuit. And so it is that kind of think of it in terms of a finance situation. The liability is on the books for 6 years, right? Because the insurance company has to reserve a certain amount of money on this claim, which may or may not go to trial. And so that shows up to you as a consumer when they're looking at what are your premiums going to be. They're like, okay, well, we have X number of claims we settled. We have X number of claims in litigation. And so we have to keep, I don't know, 3 million in reserves for your company. That's what we're going to charge you for your premiums. So that's how it works. And then the same issue with this reinsurance business where we're afraid of a nuclear verdict. And so we say, well, okay, reinsurance, we're going to have to buy a policy to cover XYZ trucking company just in case they get a nuclear verdict on this particular one. And that also is translated to the consumer, both the personal, insurance and the commercial insurance. So these things are what's causing this litigation funding has sort of really amped up the effect on litigation, which in turn affects your premiums. So I just briefly tell you the green and the blue. Green is after litigation funding came into the picture, blue is before. when you have this AI marketing going on, aggressive lead generation, with the assistance of the internet and the world of cyber everything, you can reach more people. You can reach them on more platforms. You can reach them on TikTok. You can reach them on Instagram. And we're actually seeing a tremendous number of younger people involved in this fraud as well. It is not uncommon. I just last night was looking at a claim from a 17-year-old person claiming to have lumbar and so forth injuries from a clinic that I happen to know is not there because I went to its door myself and it is vacant and has been since October when it was locked out by its landlord. So we're seeing even younger people, and I think that's a factor of the aggressive social media marketing that we're seeing. So how can we deal with this? How can we stress this? So AI is good, but human beings are always going to have to look at um, the insurance claims as they come in to look for those things that an AI system won't always catch. I'll give you a real world example. There's several staged fraud accident rings working in certain parts of Houston. And so when I see a certain street, a certain time of day, a number of people in a car, let's say five on a Tuesday, a real world example, okay, 11 p.m., five people in a car by the ship channel on a Tuesday night saying they're going to a barbecue at 11 o'clock at night who happened to be sideswiped by an 18-wheeler and happened to have a guy show up behind the vehicle saying, I saw the whole thing. Absolutely. This 18-wheeler driver sideswiped this accident. True world example. Something, my spidey sense says something's wrong with this accident. The data analytics may not catch that, but I, human being, might and will because of my previous experience and my completely cynical and jaded approach that I have to life after having investigated fraud for almost 30 years. So that's what I'm saying is AI and human beings have to work together. We're going to see an increase in fraud claims coming through the system because AI is not going to pick up on them like a human being will, unless the human being systems and the AI systems are programmed to work together. And so I do think that there is going to be some unintended fraud issues with the layoffs that we're seeing in the industries where AI is replacing people in a lot of the claims processing that's going on. And you look at LinkedIn and you'll see that every day. Analytics and cybersecurity absolutely are going to be the drivers and the monitors for the fraud. And so that's definitely going to be a factor of in catching it. And then proactive risk management and also legal reforms. If our legislature in Texas would spend some time addressing or looking at some of these things, talking to people that work in the fraud world, they would see that we probably need more investment in not just the laws that are written about fraud, but the prosecution thereof. For example, in Texas, the Texas Department of Insurance is the only entity that investigates insurance fraud. They had over 20,000 referrals in this year. They prosecuted 207 cases. So that gives you an idea of where the resources are in prosecution. They're pretty much non-existent from a practical standpoint. That's kind of where I am. I'm happy to take some questions or comments at this point.
Yeah, no, absolutely. That was great. Thank you. And do we have any questions, or would anyone like to come off mute and make a comment on this? We've got some good attendees here with some good experience. Love to hear any thoughts you may have.
Yeah, and just as a
And
quick
there's
reminder,
Jen.
if you want to raise your hand, yeah, to ask a question.
Thank you, Jen. Yeah. So this was interesting hearing this. It sounds like fraud is continually going up until somebody else asks a question. Fraud is continuing to rise each year,
Oh, statistically
Gabrielle?
speaking, that is absolutely the case. And again, as I mentioned, the ability of the fraudsters to use the technology that they use to be able to build the scale of fraud, and whether it's insurance fraud or any other kind of fraud. I mean, I think um, all discussions about scams and elder scams and call centers and all these things, Medicare frauds, and people that target the elderly or target even young people with sextortion and all these things. These are all enabled by technology and the ability to disguise who people are and where money is going. That's just going to continue as our technology evolves. So fraud goes up constantly, and will continue to do so.
Got it. Thank you. Did we have any questions or comments come in, Jen?
One thing, Gabriella, I wanted to ask, knowing I work with different companies, and I know you mentioned earlier in the presentation that I think some of the trends right now are that jurors might side more on against a company over, supporting a company. So I guess what are some ways that you're seeing companies are protecting themselves or able to, kind of come forward and prove some of these claims could potentially be fraudulent.
They are paying fraud claims. That's just the way it is. In
Yeah.
fact, there's a large, um, well known. If you Google the New Orleans staged accident ring, you'll see a real interesting case study in that. And it's reality. It's something that every single carrier out there has paid fraudulent claims in New Orleans for this reason, because the juries in New Orleans, and specifically Louisiana has parishes rather than counties. So New Orleans Parish and Jefferson Parish are well known for being, jury friendly, shall we say. And for that reason, the fraud ring targeted those particular parishes in general. They would staged accidents on I-10 exactly where the parish lines were, specifically so that insurance carriers would feel like it really was I guess no, I don't know, it's no point or very, very high risk to take a case or a claim to trial there. So they were paying fraudulent claims for years in those parishes. And it ended up, Louisiana State Police started an investigation based on some tips that they got, and it turned out to be a big federal and is continuing to be it was kind of a mafia type thing. In fact, one of the witnesses in the case was murdered in broad daylight, a guy named Garrison. And so the FBI kind of really got interested and got their teeth into that case as a result of that murder, to kind of show that they didn't like it when their witnesses got murdered. So it's a very interesting and real world example of what I'm talking about with juries. So most of the time, a lot of times, an insurance carrier will go ahead and pay a fraudulent claim or a suspected fraudulent claim in a county or a city or an area where they feel like it's too much risk to go to trial. In fact, in the 20 something years I've been doing this, I have gone to trial once. And that case was so incredibly obviously fraudulent that they decided to go ahead and take it to trial, and the defense won. Although they did pay a lot in, defense costs to do that, but they actually won that case. And in that case, the plaintiff's attorneys turned down a $300,000 offer on the day of trial, and they ended up getting zero. But again, that's only one example in 27 years of doing that I've actually seen it go to trial.
Wow. Thank you for sharing that.
Yeah, that was a great question, Jen. I like that. Thank you. Any other thoughts or questions?
Um,
If not, we're going to go ahead and wrap. Want me to wrap it up, or did you want to say something else first before you fully wrap it up, Jen?
you can take it away, Harvey.
Okay, thanks. So thank you all for coming. Really do appreciate it. Next month, we're going to talk about data privacy related to cybersecurity very closely, data privacy and protection. And we're talking about that because January is typically a month in which we sort of honor privacy, celebrate privacy, even though we have no privacy, which I'll quickly tell you. And Data Privacy Day is January 28th. So again, Gabriella, this was tremendous. really want to thank you. Really appreciate it. I wish you'd had there you go. Really thank you. I appreciate it. I think this was tremendous. And I also want to thank again Neil and Jen for hosting us, Continuity Insights. We're glad to be here. Thanks, everyone. Happy holidays, Merry Christmas, Happy Hanukkah, whatever.
Thank you. Thank you. And you too.
Thank you. I just also want to thank you, Gabriella, so much for this awesome presentation. And of course, Harvey, you've been awesome to work with. So thank you so much. Of course, thank you to our audience for attending. A copy of this or a video recording of this presentation will be available on the ACP website and on the Continuity Insights website as well. Harvey, if it's okay, if you can be contacted if anyone has any questions about the cyber
Yes.
special interest group.
You wanted me to put that in the chat. I never did. So
It's okay. If we
yeah,
could
we
send a
can.
follow-up out, yeah, and
Yeah,
include
there
your
we go.
information as well.
Excellent. Thank you.
Um, and then also, I just wanted to say that the Continuity Insights Management Conference for 2026 is coming up from April 27th through the 29th. We'll be in Phoenix, Arizona this year. So feel free to join us as well. We have an early bird special going on at the moment. But we're so excited to, again, be working with the ACP on these webinars, and we look forward to doing more in the future with you, Harvey. And thank you again to our audience for attending. Have a great day and happy holidays, everyone.
Thanks, everyone. Appreciate y'all. Bye bye.